Ever been in a tight spot financially? Needed a quick cash infusion to cover an unexpected bill or emergency? That's where companies like Uprova come in, offering installment loans that seem too good to be true. But here's the real question. Can using Uprova actually help you build your credit score? Or is it just another pit to avoid? The credit score myth. What makes a good score? Before diving into Uprova, let's take a step back. Your credit score is a 3-digit number that reflects your creditworthiness, essentially a grade on how likely you are to repay borrowed money. This score is crucial for many things in life, from qualifying for loans and apartments to getting better insurance rates. So, what makes a good credit score? Payment history, 35%. This is the biggest factor, showing lenders your track record of on-time payments. Late payments can tank your score for years. Credit utilization, 30%. This is the ratio of your credit card balances to your total credit limits. Ideally, you want to keep this below 30%. Maxing out your cards is a red flag. Credit age, 15%. The longer you've had credit accounts open in good standing, the better. Building a credit history takes time. Credit mix, 10%. Having a mix of credit cards, installment loans like mortgages or car loans, and even utilities on your report shows responsible credit management. New credit inquiries, 10%. Every time you apply for a new line of credit, it triggers a hard inquiry that can ding your score slightly. Be mindful of how often you apply. Uprova's claims. Building credit with installment loans? Uprova advertises their installment loans as a way to build credit. They claim that by making on-time payments on your Uprova loan, you'll see your credit score improve. Sounds great, right? Well, there's more to the story. Here's the key. Uprova doesn't necessarily report to the major credit bureaus, Equifax, Experian, and TransUnion. These are the bureaus that lenders typically use to check your creditworthiness. So, if Uprova doesn't report your payment history, how can it possibly impact your score? The alternative credit reporting route. Uprova might report your payment activity to alternative credit bureaus. These are not the same as the major bureaus, and lenders don't always use them in their decision-making process. While on-time payments with Uprova could help build a positive report with an alternative bureau, it may not translate to a boost in your traditional credit score. Weighing the pros and cons. So, can Uprova help build credit? It's a maybe. Here's a breakdown of the pros and cons to consider. Pros. Potential for alternative credit reporting. If you have no credit history or bad credit, Uprova could potentially establish a positive report with an alternative bureau. Fixed rates and terms. Uprova offers installment loans with fixed repayment terms, which can help you budget and avoid surprises. Cons. High interest rates. Uprova loans can come with high interest rates, making them an expensive option. Uncertain credit impact. Uncertain reporting to major bureaus makes it difficult to predict the impact on your traditional credit score. Focus on building traditional credit. There might be better options to build your credit score, such as secured credit cards or becoming an authorized user on someone else's account with good credit history. Before jumping on a Uprova loan, consider these alternatives for building credit. Secured credit cards. These require a security deposit but function like regular credit cards. On-time payments get reported to the bureaus, helping your score. Become an authorized user. If a friend or family member has a good credit history and is willing to add you as an authorized user on their credit card, their positive payment history can benefit your score. Credit builder loans. Some banks offer these special loans where the money is held in a savings account while you make monthly payments that get reported to the bureaus. Remember, building good credit takes time and responsible financial management. Explore these alternative options and prioritize on-time payments to build a solid credit foundation. With that said, thanks for watching, and until next time.